If you're taking on the role of being a director, you've signed up for a big task.
Making sure companies are paying for performance is the biggest challenge facing compensation committees today.
Corporate Board Member presents the Board Governance Series, with series contributors PricewaterhouseCoopers and Meridian Compensation Partners. On this edition of the Board Governance Series, what directors should know about combating fraud, with Catherine Bromilow, Partner, Center for Board Governance, PricewaterhouseCoopers.
Thank you for joining us on this edition of the Board Governance Series. I'm Laura Finn, web editor of boardmember.com, and today I'm speaking with Catherine Bromilow, partner at PricewaterhouseCoopers. Catherine, thanks so much for joining me today to talk about fraud.
Thanks very much, Laura. And it's really interesting because fraud is often a topic that, polite company doesn't want to speak about. But we do believe that there are directors out there who are probably, at least in some way, concerned about the extent to which fraud may actually be happening in your companies and really what you can do or how you can think about it. And so that's why we wanted to share some perspectives with you today.
Fraud is a very comprehensive term. What comes under the definition of fraud?
Fraud really covers a very wide range of bad behavior, and it goes from everything from misappropriating assets to insider trading to bribery and corruption to tax fraud. But probably the most devastating fraud that companies can ever face is financial reporting fraud. So that's why we want to spend a little time and delve into issues around financial reporting fraud.
What happens if there's financial reporting fraud at a company?
Well, there are probably a number of things that happen, and almost none of them are any good or any fun. And there's a bit of a cascade effect when there is financial statement fraud, but it starts with the fact that you will probably see your stock price plunge. You'll probably be faced with a number of class action lawsuits that you're going to have to defend and deal with. But probably more importantly, you are going to see just significant costs in terms of time, resources, and money to actually deal with both the investigation and the restatements that have to happen. So for example, if at your company there's financial reporting fraud found in a subsidiary in another country, there are going to be questions like, well, is it happening in even other countries? How wide do we have to do the investigation? What do we have to look at? And just what is the spread? Because all of that investigation has to be done, and you have to have pretty final answers before you do your restatement, because as disruptive as one restatement is, you never want to get into the situation where you have restatement and then find something else and have to do another restatement and find something else, and so on and so on. Now, all of those things between stock price crashing, class action lawsuits, and just the phenomenal cost of investigation really will combine to do things like also distract management and their effort from running the business and building value. And then they also have the follow-on reputational hit, not only for the company as a whole, but also for individuals and perhaps even directors.
That sounds scary. So what should directors be doing?
Well, it is very daunting when it happens to a company. And so for a director, there are actually a number of things that you could do, but I'm going to boil it down to say maybe three key areas. The first is be skeptical. And I understand that this is tough because the reality is you would not be on a board if you didn't trust management, because your personal reputation and what you've built with your career, you're not going to throw that away. So you start from a point of view of having trust in your management team. But that said, we know that financial reporting fraud happens. And so you really have to maintain the skepticism. And you can look to whether there are things that should be red flags to you. So for example, is your company experiencing, some pretty significant operational problems, but still being able to make its numbers? And those are the kinds of things you have to probably keep your antenna up for that could really indicate that you may need to dig deeper. The second thing is really understanding what the environment is. And what I mean by that is figuring out, are there factors there that make your company a little more likely to face fraud? One of those could be pretty aggressive Wall Street or analyst expectations that the company puts a lot of stress on actually meeting. Another could be sort of a more internal factor, and that might be how the compensation programs and policies are structured, and just whether or not incentives are based on certain financial targets, because that always gives people motivation to make sure they meet the targets so they get paid. And probably the third thing is to make sure you're really comfortable with the tone at the top. And that is the ethical stance and the expectations that not just the most senior management in a company sets, but also management all throughout a company. And so you can look for things like, how does management deal with and respond to those individuals in the organization that always seem to sort of operate in shades of gray or just near the boundaries? Does management make sure they get exited from the company, or do they get promoted and moved around? So those three things probably, Laura: the skepticism, the making sure you understand sort of the environment and what risk that might pose, and then making sure you're really comfortable with the tone at the top, would be probably the three key things.
Now, I'm sure you could talk about this for hours and hours. Since we can't, if directors want more information on financial reporting fraud, what do you recommend?
Well, there's a really good study that was issued at the very end of 2010 by the Center for Audit Quality. The report is entitled Deterring and Detecting Financial Reporting Fraud, and it's available on the CAQ's website. And I'd encourage you, as a director or as a member of management, if you want to understand a little more around what you could or should be doing and where the risk areas are and the ways to sort of think about fraud, I'd encourage you to go get a copy of that report. It's written at a very high level with very specific action steps that directors can have, and that may help you really get your head around, are you doing the right things as a board in your oversight role in this pretty important area of addressing the risk of fraud.
Thank you so much, Catherine. It's always really interesting to hear what you're bringing as a hot topic for directors, and I appreciate your time.
Thank you, Laura. It's been a pleasure.
And thank you for watching this edition of the Board Governance Series.
Catherine Bromilow can be reached at catherine.bromilow@us.pwc.com. The Board Governance Series is a presentation of Corporate Board Member, an NYSE Euronext company.